Let me explain how you can avoid going broke when trading. Hey, ladies and gentlemen, fellow traders, good to see you again. Good to have you on board. Don't forget, trading is risky. Most traders lose money. If you don't like trading, or if you don't like losing money, you shouldn't be trading. You might like trading. I got that mixed up a little bit, but there you go. How's everyone? How are you doing? Hope you're all well. Hope it's good to see you again. And I hope everybody's making loads and loads and loads of dosh. Been an interesting week, an interesting weekend. Thanks to Brewman, I traded Ethereum on Friday. Was it Friday or Thursday? Friday, but I held it over the weekend, and not on this account, on my main account, and it actually made me a few $1,000s. Good one, good one. Bringing that one to my attention, I actually traded, did really well, made some money, broke up to the upside, and there it is. There's the Ethereum account. Did really well. It broke to the upside, made all that money all the way up here. That was great. I could have kept it to 5,000, but I just decided to take that profit. It was quite a decent profit at the end of the day. And it sort of stop loss back into that profit. And yeah, decent trade. That was a good one. That was a nice one. I don't normally trade crypto, but that was a good crypto trade. Gold looks like it's getting a bit weak. Look at gold. Gold looks like it wants to drop out of here and fall down. So caution on gold there, caution on gold. I took the good old Brent crude oil trade. Look at that, back in the Brent crude oil. And the minute I got into it, it started to go red here for whatever reason. But it is breaking structure and looking to go to the upside. So I'm happy to hold on to Brent crude oil with a stop loss down at 61.80. I'm perfectly happy with that. How's it showing? And then United States dollar, South African rand. Yeah, Shane, it's a nice one, especially when it's on your cash account, dude. That's the one. That's the one you want. Okay, so South African rand, United States dollar, South African rand. I'm long on it again. How many times have I been long on this trade in the last few weeks? And it really, I'm still convinced. I'm married to this trade. So I'm back in again at these lower levels, at this level, but it's just flat at the moment. It's going along. It's not going anywhere just yet. But it did look like it had broken through the structure, and it looked like it wanted to go up. And instead of going up, it kind of just filtered along to the side. So that one's not doing anything for me at the moment. But oddly enough, I am also long on my main account on that as well. So I just thought I'd throw it in here. The Euro Great British Pound paid out as well. But this one, before the weekend, I actually let it go, and I should have stayed in it. But it's paying all the way to the bottom. Would have made a nice profit all the way to the bottom here, but unfortunately it was weekend, and I didn't want to sit in that trade on the weekend because it is the Euro Great British Pound, and all kinds of things can go wrong. Hey Dave, if you're out there. Yeah, all you guys are out there somewhere, somehow, sometime, someplace, hanging about. Where's everybody today? I'm only seeing Shane online here. Nobody wants to speak to us today, Shane. Okay, I'm sure everybody will be here shortly. So I did put a video together for, is it next week? I'm putting a video together about retirement. So for Friday, actually. Yeah. Guys that want to waste all their retirement money should watch that. That's pretty good. But this video is also entitled How to Avoid Going Broke While Trading. So many guys go broke while trading or spend their last money while trading. And the big thing to understand when trading is you don't want to be throwing that last little bit of money away, that last little bit of cash. So I want to talk to you a little bit about investing today and how you can invest in the markets and the best way to go about it. Somebody did ask me that question, so I think I'll go over it a little bit today, and we'll talk about it, because it's not about charts. Investing is not about charts. Investing is about kind of discovering which is the best company to trade in or to buy and not sell it. And the difficult part about investing is not selling. If I put a rule in place, you must buy and you must never sell it. It's going to be very difficult for most people to get their head around. The only time that you're allowed to sell a share is if you can see that that share is doing rather badly or there's a possibility that something's going to go wrong in that company, then you can sell the whole company and you can buy something else. But selling a few shares here and there in the company, or selling shares in companies, when you're younger and you've just started out with your investments, it's a no-no. You buy it, you set it, and you forget it, and you're never allowed to sell it again. Those are the rules. Much totally different to trading, but it's basic rules, though. Basic rules. Gold took me out today. I was into the buyers. I'm done for the day. Yeah, you know, that's fine. If you have a rule and you get taken out, then it's a good idea sometimes to just walk away and take a step back. You know, normally if I take 3 losses, I'll walk away. But one loss I won't walk away from. I'm used to taking losses. Losses are fine. But, you know, if you take too many losses or things are going against you, sometimes it's a good idea just to walk away from the trade, man. Walk away and come back later. How's it, Elaine? Good to see you. Yeah, look, my thoughts on gold are it looks like it actually wants to start coming down. You know, it's broken through this. This could also be considered as a short-term support, shorter time frame support. There's a support on the 4-hour here, breaking through that support, and it's also a demand of money that it's breaking through, which means that money's not holding it up. So it's breaking through. It was held up here, and now here there's not enough money to hold it up. So it seems to want to break through it and drop down, which means it'll drop down to the lower support level, which is much further away. So this looks more like a short trade than a long trade at the moment, but bear that in mind, that all of these candles have got a lot of tails on the bottom, so you've got to keep that in mind as well. There's tails telling you that the buyers are getting back in every time it hits this level down here. So what you might want to do is just take a line in the sand and say, you know what, I'll get in short. If it breaks below that level there, I'll make that red so you can see what it's about. If it breaks below that level there, then yeah, we can look at a short trade, because then it's breaking below that level, because every time it hits that level, the buyers are getting back in for some reason. So there's some level of importance there. So that's why I put these lines in, you know, so that you can see there's a level that's important for whatever reason. And if it breaks past that, then you can actually look at taking a trade through there and getting out. Put your stop loss above that level. Look for a trade all the way down to the bottom here. But gold is looking rather bearish at the moment. Brent crude oil. I was looking at a bullish trade here, and it doesn't help me if gold is bearish, because it kind of tends to follow. But you know, it looked like it had broken the structure here. It looked like it wanted to go, and it also doesn't really want to do anything. It doesn't want to go. It doesn't want to move. I think there's a lot of indecision with the news items coming out the next day or two. A lot of things in the inflation that are happening, and everybody gets caught up in that fundamental news. Everybody gets caught up in that story, and inflation and interest rates and all that sort of thing. And they actually literally stop trading because they're so worried about which way things are going to go. And then when it does happen, it spikes in one direction and then comes all the way back to where it was, and then spikes a little bit in the other direction, comes back where it was, and it doesn't do anything anyway. So I don't know why everybody gets all involved in that stuff, but they do. Should really consider looking at the bigger picture, which is what's really happening in the world, what's really happening with the markets, and what's really going down. I mean, if you look at the NASDAQ 100, it should go up, which will probably push the S&P 500 up as well, because, I mean, there's a lot of good news surrounding NVIDIA, for example, and other tech things. So there was good news surrounding Apple the other day. So there's a lot of things that should push the markets up, but they're holding on at the moment. Everybody's just waiting for that news. And that you're going to get that a lot in the markets. If you're new to trading and you haven't been doing this for a long time, you're going to find that a lot in the markets, where everything just seems to stop dead. Everybody's waiting for that little news article or that little news item to happen. And then when it does happen, it's just like a wet blanket, you know. What the heck, you know? It didn't really help at all. I actually wish I'd stayed in this Euro Great British Pound now before the weekend, because it's really playing, the whole trade's playing out really well. But that's life. Those are the worst ones, you know. You think, oh, I'll dump it for the weekend because I don't like holding it for the weekend, and then on Monday it goes the way you wanted it to anyway. Always quite insane. So anyway, let's start talking about how you stay in the markets, how you stay sane in the markets. And the one thing to stay sane in the markets, as you guys always know, if you're trading, I always talk to you guys about the strategy and the stop loss and managing your risk and managing your trade. But for those guys who get into the world of trading, let's say, and they're looking at getting into the markets for whatever reason, and you've got your, let's say, your pension, your last money, let's say you were retrenched or something like that. What are you going to do to survive? And a lot of guys see these guys on YouTube, like me, out there, but this is not like me, where they're advertising to you that you can make loads of money trading. And I've never advertised that to you. I've always tried to be straight up with you guys and tell you that it's not easy to make money trading, and making money trading is really difficult, and there's a good chance that you're going to risk and lose money. So I try to promote that to you so that you understand up front that you can make money from trading, but there is a good chance you can lose money from trading as well, thus making trading 50-50 for you. This is just the news. But I pulled up here, for example, here's a Coca-Cola company, and this is how you look for your trades. Now, the first thing you're going to do when you're looking to buy an investment share is not worry about the chart. If you want a chart, I mean, this is Yahoo, for example. I know that my investment portfolios and things like that don't even have their own charts. They'll take me to a Yahoo chart or something like that anyway. But if you go to these advanced charts, they're quite good. They're quite interesting. But when you're investing, you don't need a chart. When you're investing, you kind of need a little bit of insight, a little bit more fundamental insight into your investments. And it's a slightly different ball game, and it's a set and forget ball game. And this is the one area where I'll tell you to dollar cost average, whereas in trading, I'll break your fingers for dollar cost averaging down because it's really bad. And if you dollar cost average into profit, that's a different ball game. So yeah, that is a completely different thing. Bruman, hey, how's it, man? Good day to all. Hi, hey, how's it? Okay, everyone's here. So I'm talking a little bit about, those guys who get a large sum of money, and it's their last sum of money in the world, and they decide to start trading with it. And my question to you is, if it's a pension, or if there's no other income, or whatever the case, and it's your last lump sum that you're throwing at the market, what are you going to do if you lose it? What's going to happen to you if you lose that money? Can you get it back anywhere? Is there a possibility of getting it back? Now, I don't know how much it is or how big it is or whatever the case, or if you've got enough where you can invest a smaller amount into the market, whatever. But even if you lose that smaller amount, where do you stand if you lose that? So I try to promote rather that people in that scenario, in that situation, take a really small percentage of that money for trading and learn how to trade, or even use funded accounts to learn how to trade or something like that, and take the larger portion of your money, and rather, if you don't know how to invest it yourself, let an investment bank do it for you. But if your investment bank does it for you, what they're going to give you, 15%, 10%, whereas if you do it yourself, you can make 30, 40% per annum, which is, just by buying and leaving it there. How do you look for shares, though? And how do you get the insight into this? Now, this might take you a bit of time to get your head around, but you just got to look around you. Look at the stores that you go to. Look at the businesses that you deal with. Look at what's happening on a daily basis. And say to yourself, where do I see that company going in the future? Now, there's a lot of guys out there that are investing and stuff like that know the CEOs and that sort of stuff. So you can go here to, for example, the holders of the company, and you can have a look at who holds it and how much he holds, and is he a good CEO? And, for example, Berkshire Hathaway holds a huge portion of Coca-Cola, and it's sort of Vanguard Group, stuff like that. So you kind of understand who's running the company. But if you go to the summary in most of the, and you get this in Bloomberg, you get this in And sometimes you get it with an investment account or whatever the case. But things to look at, price to earnings ratio, but forward price to earnings ratio. In other words, what will the company be worth tomorrow in the opinion of, okay? Because a price to earnings ratio of 15 is good. A price to earnings ratio of 25 is starting to go south, and a price to earnings ratio of 50 is terrible. So the higher the number goes, the more it becomes a non-viable investment or an expensive investment. So what a price to earnings ratio does is it shows you how expensive the company is. So you can look at areas like that, but it doesn't play as much of a bigger part as it used to in the old days. In the old days, it was quite important. But things you might want to look at is forward dividend yield, ex-dividend dates, how much the dividends are, what dividends do they pay, how much is the percentage. Remember, they might pay twice a year at 2.88%. It's not bad, it's money coming into your pocket. Are you looking for shares that are going to pay you dividends? Are you looking for growth shares? It might depend on your age. If you're younger, you might want more growth shares. And if you're older, you might want more dividend paying shares because you might want some income from what you invest in. And there's a lot of things to look at when you look at the share. There's profiles, there's the financials. And for those of you that understand a financial statement, that have ever owned a business, assets and liabilities, that sort of thing, profits, losses, you can go through the financial statements in these areas, and that'll help you. So why am I going through this? I'm trying to point out to you that, trading isn't your only option. There are options available. Here's all the news on the Coca-Cola company, and if it's valid, and if you understand how to work into the news, you can read the news on the company and see what they're saying. It'll also tell you if the company's closing down or going bankrupt or anything to that effect. There's analytics or analysis that you can get on most of these pages as well, which will tell you the earnings per share, the revenue versus earnings, analysts' recommendations, people how they feel about it. Is it a strong buy, a hold, a sell? Analysts' price targets, what their price targets is for the future. There's lots of information that you can get just off of a free Yahoo Finance package or Bloomberg or any one of these, or even your own broker's package that they give you. What I say is be very careful, especially if you're older, especially if you're an older guy. And I know I've got a lot of older subscribers and viewers on this channel, that you guys want to learn how to trade, and obviously I stick to that and I show you trading. I'm just trying to tell you guys that there is another option. There are other options available. Yes, this is not fun because you just buy the shares and you leave them and you forget about them. But if you get a lump sum, let's say you get $1 million today, and they tell you, okay, you got to go home now. You've been working all your life for this XYZ company, and they tell you, you got to go now, and you're 60 years old. You're not even 70 or 80. You're just 60 years old, which means you've got quite a bit of life left, maybe. I don't know. Let's not go there. But yeah, now what do you do? What do you do? Now you take the whole $1 million and you start trading with it. And that's why I say to you, yeah, I get it. I do get it. I understand where you're coming from with that. But by the same token, what if you lose it? What are you going to do if you lose it? And that's my question. That's the question that I ask you. So what you should rather maybe think about is rather take 90% of that, $900,000, put that in investments or banks or whatever, and then maybe play with 100,000 or even 50,000. Learn how to make money on trading before you play with that. Because I know from my side that most of my income comes from investments, not from trading. Trading makes me money, but not on the same level as investing. Investing is huge. It's massive. It makes you a huge sum of money over a period of time. It just does. It is how it is. And it's always been like that. Ask Warren Buffett. He'll tell you. He's still around. You can still ask him. Otherwise, there are a few others out there as well that will tell you the same thing. The big question a lot of people ask me is, how do you choose the share? And that's what I was showing you now. I don't even look at those figures that I was showing you now, those little numbers and whatnot, price to earnings ratio and stuff like that. If I look at a company like Amazon, like Coca-Cola, like Nvidia, like Tesla, like Apple, or here in South Africa, like Spar, I'll look at it and say, this company looks like it's going somewhere. They're renovating their shops, they're cleaning up, they've got a lot of businesses, lots of customers going in and out of the store, what have you. I might go back and look at the financials. I might go back and look at the price to earnings ratio, depending on how much money I'm putting in the company. And then I'll look at that and think, yeah, I like that company. I'm going to put my money in there. But the decision has to be final, because once you buy it, you keep it. And you keep it until such time as you see something going insanely pear-shaped in the world with that company. Then you sell the whole company, like I say, and you buy into something else. And then that's how you're going to grow an insanely huge portfolio over a large number of years. But if you have a cash amount immediately and you want to put it in, then it's already kind of grown, and it's only going to grow bigger if you keep on adding into the share portfolio. And remember, that's on a one-to-one, not leverage trading. That's one-to-one, totally one-to-one. How's it, Henny? Good to see you. Is anyone here under 40? Oh, that's a tough question. I actually don't think, Brewman, that too many people under 40 will be interested in my information on my channel, because a lot of those guys won't want to believe what I'm telling them. But it would be good for them to watch my channel, because they would learn something, and it would be good for them because they could grow into the future. I'm actually quite surprised that more younger people, wouldn't be interested in this type of channel. They're more interested in those channels where the guys are showing off the Lambos and flashy things and 5-minute charts and all that sort of stuff. They're far more interested in that. And I can understand it, because their attention span is that much shorter. And I think that's why I've got an older audience as well, because I talk a little bit slower. I don't talk fast, and I don't bounce things around as much. And I try, but I'm not that good at it. And they want to see things move fast. They want to see instant gratification. And so I think they're looking for a different type of information to what we got to offer. But yeah, there might be someone around who's younger, and I hope that they do come. I welcome them, because I'd really like young people to learn. I'd like them to figure it out. Top of the morning to all. Just checked your website, Logical Trade, after I've been on holiday for a while, and you spotted top post in the trade of the day. The website, I'm changing into something else, Mark, because we have Trade of the Day here on YouTube, which is for you guys. And look, I've got the members video, which goes out every day with Trade of the Day, which is in more detail and whatnot. And then also just the normal Trade of the Day, which goes out to the first level of members and whatnot. And the reason I stopped it on the website is because it wasn't really going anywhere. And it's just extra work for me that I don't need. You know what I mean? I just don't need the extra work. So I actually just stopped that for now. I can try and put it back in again if I get a lot of requests for it, or try and add it in there somehow, or whatever the case. But what I'm using it for now is a sort of more weekly post. So I'm putting out a weekly post about trading, which is far more informative, with more information from some of the videos that we've done and that sort of thing. And I'm trying to widen the aspect of that. And you'll notice that's not even a paid blog. It's a free blog that I was using for that. I'm thinking of turning it into a more paid blog thing, or whatever the case. I'll see. It's not my thing. I'm not a blogger, you know what I mean? But I haven't. I looked at it and I thought, I just felt like I was wasting my time there. There's a lot of people that looked at it and whatnot, but it was the same thing over and over again. And I do have a life, I do trading and whatnot, and I enjoy doing the YouTube, but I found myself not really enjoying doing that. That was sort of extra work that I don't really need, to put it mildly. But I'll see what I can do for you if that's what you need, maybe in a different format or whatever the case. But that's why I kind of dumped that. What I'm still doing now is a more enjoyable thing. I'm putting a nice story together, a bit of a blog post, whatever, once a week on that, off the weekend or something. But yeah, I don't know why I even had that, you know. But yeah. As Bruman says, just put all your money into Farcoin, you'll become a quadrillionaire. And thanks, Bruman, for the tip on Ethereum. Like I said earlier in the video, made me a couple of $1,000 on my main account over the weekend, and that was enjoyable because crypto. I'm not a big crypto trader, but yeah, it made me some dosh. Okay. Anyone? No. I have a short attention span, Shane. Lol, I do too, as you can tell. Yeah, I don't think there's too many young guys that will watch this because, when you're telling them that you can lose money and it's difficult and all that sort of stuff, then, they kind of lose interest in that scenario. As far as Trader of the Day guy goes, I mean, you guys can have a vote on it and see what you want, but it's out there, and I keep it now for the members that get it because they support the channel, and yeah, that's fine. I give them a video every day and a bit of information and whatnot for that, that's the end of the day. So you kind of put yourself out there and you put your time out and that, what have you. So if you add extra things to that, it starts becoming a real pain. Okay. Yeah, I doubt any of you guys want to start investing now, but I'm putting it out there for you guys that, especially for the new guys, the guys that are starting out and they've just received that pension, they've just received that large sum of money, and they're just going to get into trading, and someone's told them that they're going to make a fortune trading, and they haven't told them that they could possibly lose it. That it's a good idea to look at the investment side. It's a good idea to start looking at how you can protect that capital rather than risk it. And especially when you get older, you realize that it's vulnerable. And you realize that it can be more vulnerable. When you're younger, you're much riskier, you'll take that chance, whatever the case. But when you're older, you realize that, it might be your last stand. And you throw it all down, the loo might be a bit tricky. Bruman, great. Now, Bruman, if you don't need it, you don't need it. Eh? It's there for those who need it. And, the thing is, Bruman, and it doesn't matter if people are there or not. At the end of the day, if I do absolutely everything for nothing, I'll be buried. I'll be inundated. I won't have time for myself. And so that's why I put little blocks in place, little things that, those people that are interested in that are seriously interested because, maybe they got to pay for it or whatever the case. And it just makes it a little bit more serious, because one thing I've realized is the more you do for nothing, the more inundated you become. So I'm careful with that. I'm careful of not overextending myself in those areas as much as possible, and I'm giving as much as I can. And but yeah, there's a thing called time, and you start losing that time, and you start losing your privacy and all that sort of stuff, and it becomes an issue. So you try and put little things in place to make it more streamlined. But for those of you who don't need it, I mean, there's no problem. I mean, that's fine. I don't like, it's like I say as well, there's not a lot of young people here. I'm not forcing them to watch my videos. They don't have to. If they don't agree with what I say, it's one of those things, you get a message out there, and I'm in the fortunate position now that I can put a message out there. And it's nice. It's a good feeling to be able to put a message out there. In the past, I used to think, maybe I can put a message out there, maybe a Facebook post or put a video out there, whatever the case, and then nobody's going to see it. One person's going to look at it and go, But now you got a channel that's got quite a nice, decent following. I can put a message out there. I can say something if I want to, and that's nice. That is good. It's a nice thing to actually have. What am I looking at here? Let's just have a look at our positions and Brent crude oil, and of course, United States dollar. Not doing anything, doing absolutely nothing. I think everybody's waiting for news this week. Everybody is waiting the news this week. You see, what Bruman said here is very, very relevant. People need to learn how to trade and invest more than ever now. And I agree with that because, you know, I see so many people in the world struggling along, losing their jobs. They don't have an income. They don't have money. They're not finding their way through. And there's so many ways in the world that you can find your way through. For example, trading, if you figure it out. And there's so many guys out there that are just end up on the street because they just can't figure it out. And I think it's because as youngsters, they're taught that you must go to school, study, get which is true, you need that, but then go and get a job and just work for someone for the rest of your life. So they don't have that entrepreneurial spirit. So when things go pear-shaped, those people end up really having to think twice. What's next? What am I going to do? Where can I find it? The first thing a person like that will normally, or the first thing they'll think of is, where do I get another job? Rather than, what can I do for myself? So it's a very difficult, you know, when your brain is programmed along those lines, and then you have to reprogram yourself and realize that the world is becoming a place where you need to work out your own way of making a living. Now, some people are more fortunate, like myself, where I've always dreamt of it. So I started it when I was 27. And since then, I've never worked for anyone. And so for me, it's easier to like always look for something, always have something on the go. But for someone that has been programmed to have a job and to keep looking for a job, it's very difficult to get out of that rut and very difficult to get into something like trading. And also, if you are a trader, no matter how risk averse you are, if you're very conservative or not, by the same token, you are still going to have quite a large amount of gambling in your mind. You know, a lot of there's going to be a bit of a gambler in you, and you can't get that out. So a person who is completely risk adverse to that sort of thing will not get involved in trading at all. Especially when you understand that it's 50-50. It's quite interesting. Yeah. And as Henny says, that's if they get a job. Now that's what I'm saying, Henny, is most people are not going to get the job. Most people are going to not get the job now because jobs are becoming more and more scarce. You know, back in the 70s, everybody had a job because everything was done in production lines. Companies that made cars had thousands of people working for them. And you needed all those people. And you needed the T-boy, and you needed the sweeper, and you needed, I don't know how many people on a production line. And, you know, you had all these people working in these factories and what have you, coal mines, all that sort of thing. So everybody could get a job. And it didn't matter if you were highly educated or poorly educated. The highly educated guy became the boss, and the poorly educated guy swept the floors, became the T-boy, whatever the case. But he had a job, and he had a pension, and he had the whole 9 yards. These days, due to, and I'm not saying artificial intelligence is bad, but due to the increase in artificial intelligence, the increase in computing, the increase in technology, which snowballs, by the way. I don't know if you guys know this, but technology starts here and it takes 50 years to make the next thing, then it takes 5 years, then it takes 1 day, and it just snowballs to the point where it's growing so fast it's insane. And we're growing at a speed now where people are becoming more and more and more unemployable because you don't need them. You got programs that can do that for you. You can program things to do these things for you. And it's becoming more and more difficult to employ people. And those people need to find ways to make money. And there are ways, loads of ways. But people just aren't finding them. You need to everybody needs to be reprogrammed. And that's the thing. The education system needs to be reprogrammed so you can reprogram people's minds into how they're going to survive in this new world of change. For example, stupid thing like cash isn't going to be around anymore. We're not going to need cash. Everything's going to be a digital currency. What about all those people that were involved in the making of cash? What are they going to do now? What's their job? What's their next job? You know, the people, the banks are closing down all the ATMs. They don't need ATMs anymore. So what happens to the people that were making that equipment or those things? You know, it's always improving, always changing. But the more it changes, the more people's jobs become obsolete. Now, those people need to think, what am I going to do next? Where am I going to work? How am I going to make money? And you get retrenched, you get this huge package, or you get put on early pension, or you get put on pension, whatever the case. So many of my friends have been pensioned off. You know, just recently, I had one friend who contacted me who said, well, he's got a choice. He can either go on pension now, or he can try and wait for the next few years and get the, get the full pension. And I worked it all out for him. I said, you could actually go now, but he decided to stay, and now that company's in big trouble. So now my question is, you make that decision to stay, but then that company is going to disappear. What now? So many problems in the world to resolve. But that's why I'm trying to say, like, if you are that guy and that is your last income, that's your last money that's coming to you, how are you going to risk it? Are you going to dive into trading and start throwing it at trades on leverage trading? Or are you going to protect that capital at all costs? So now what I say to you is, even if you do get this money and you protect 90% of the capital by putting it in investments, and the other 10% you decide to trade with, now you've got to protect that 10% as well. You can't just throw it away, because then you start moving into another 10% or some more of that, because you're going to have to withdraw from that cash to carry on trading. So you want to protect what you're trading with at all costs. So if you take $100,000 out of your pension or whatever it might be, and you decide, now I'm going to trade with that, you don't want to lose it. So you got to protect that at all costs. Somebody was asking me the other day about the 1% risk factor. Is that enough? Should I, 1%? I mean, really? Yeah, because when you leverage trading and you take 10 trades at a 1% risk, there's a good chance that you're going to lose a large portion of your account. So you've got to be really, really, really careful about how you protect your risk and what strategy you're going to use to protect that account so that you don't lose the whole account. So on a $100,000 account, I'd rather risk $1,000 per trade. If I lose 10 trades, I lose $10,000, not $100,000. You got to think about that, because if you use $100,000 to trade $1 million because you've got a leveraged account, and you lose 10% of that $1 million, how much of your account have you lost? All of you can answer that question. You've lost your whole account. You've lost the whole $100,000. So managing your risk is the most important factor. Learning how to invest is the second most important factor. But when it comes to investing, a lot of people will look at me and say, but Rob, what about stop loss with investing? Now you've got two choices here. There are those that advocate you should have a 10% stop loss on your investment. I'm adverse to that. I don't have a stop loss on my investment. I have a mental sort of computing, but I never even look at them, to be fair. And for me, an investment is a set and forget. And I'll rather actually dollar cost average an investment, unless I can see that the company's really, really, really bad. I don't sell my investments. I keep them. I keep them forever. But then by the same token, I also try not to buy them at the top of their price. I mean, if you are going to look at a chart and if you are going to look at a share, Don't go and buy it when it's at its most expensive point. You know, buy it when there's a pullback. Buy the shares when there's a bit of a correction, and then buy in as much as you can. So save up, save up, save up, save up, save up. You've got a portfolio, right? You've got a portfolio of shares. Now you don't want too many shares. I mean, just add to the ones that you've got if you've got enough. When you have a correction in the market, throw some money at those shares. Add on. I do say add monthly. I add monthly to my accounts, but by the same token, you can hold the powder and you can wait and see if there's a bit of a correction. You can throw a larger amount of money at it, and then it doesn't matter if it pulls back or goes up, because over time it grows. It grows with inflation. Those companies grow, they grow larger, they grow bigger, and you get the dividend incomes from them. And the dividend incomes are worth a lot. The dividend incomes are worth a lot to you in the long run, not just the growth. But bear in mind there are two types of shares, okay? Because there's a lot of shares that have kind of grown to a point where there's not that much growth left, but they will always improve the company, and those ones will pay high dividend amounts. Then there's those ones that are just growing. I mean, they started here and they've just got so much scope to grow into a huge size. And those ones will pay lower dividends because they're putting the money back into the growth. Think about that. Why aren't they paying me dividends? Because the money's going back into the company and the company's growing. So keep that in mind as well. You need one or two of those as well, where you've got huge growth potential, because the growth potential can make you a lot of money. You buy a share for $6 today, and in 10 years' time, it's worth $600. Just work that out. It's rather insane. That's a growth company. Stay away from penny stocks. Penny stocks are a waste of time. It's a gamble. It's not even a 50-50 gamble. It's probably a 90-10 gamble where you're on the 10 side. Stay away from penny stocks. They're a waste of time. Most of them, it's like venture capital. Most of it fails. Most of it fails. You get the one that will work out. You might get lucky, but don't waste your time. Buy companies that are worth something. Buy companies that you can see in the marketplace, that you can see this company's got lots of potential, it's doing well, and it can still grow much bigger. Imagine if you'd got involved in something like Amazon when it started out, or even now with Temu or whatever the case. You get involved with these companies when they're starting out, and you see the potential in them when they're smaller, but they're still good companies, they're still blue chip companies. Then you grow with them and you do well. There are those companies that just never grow. I mean, those are horrific, but there are those that do grow well. Yeah, it's different systems, Shane. You say, yeah, what about buying a 52-week high that has large volume? You know, there's different ways of looking at it. When I buy investments, I don't look at technicals as much as actual value, just straight on value. You know, if I see value in the company, if I see potential for the company, I look at it from a different perspective. And I look at, for example, a business, and I see that people are interested in doing business with them. I see that they're growing. I see that they talk about growth. I see that they want to do things, or I see that they do make loads of money and they pay large dividends and that sort of stuff. Then I look at investing in them. I don't look at them much from a technical perspective. In fact, if you wanted to start a share portfolio, you could literally take the top shares, throw a dart at the board, and pick any one you like. They'll all grow as long as they're good companies. There are some that are a bit better than others, you know, and then there are some that are worse than others. Gold. Where's gold going today? Right. A couple of you have lost money on gold now because it looked good. You know, the big problem with gold was I looked at silver, and silver looked like it wanted to go up. And normally these two run in tandem, only silver being without liquidity, but gold is now looking like it wants to head on to the downside. So what I think I'll do with gold, like I said earlier, is I'll wait for it to break through this level here. There's the last low. If it breaks through that last low, I think I'll hit a short on it, because look at the distance you've got if it breaks through this. If it breaks through this level where it's holding on, there's a huge distance down to here, so you can get quite a decent trade out of it. So I'll definitely keep an eye on gold for that. Let's see if ETH has got any more movement on it since Brooman's here today. I'm looking at this and I'm thinking maybe another high if it breaks past that high. And then BTC has, ooh, look at that. Okay, I never looked at BTC this morning, but that's interesting. That's very interesting. That shot all the way up, pincer top, all the way back down. It's almost like a lamp pole formation. It's falling over. It's falling back through these levels, which is very interesting. So it looks like Bitcoin wants to come all the way back down to here at 110. Wow. That would be interesting, wouldn't it? I'm going to remove that because it's worthless now. I'm just going to have a look at these levels here. There's a couple of levels here. Let's just see. Yeah, that's the main level there. Okay. Very interesting that it did that a few days ago, and it's done that again. Spike through, come back. And that's not even a double top. One's lower than the other. Breaking back to the downside. So it looks like Bitcoin wants to break down to the downside, which means most likely, in all probability, Ethereum's not going to go up, which is why I said I'll wait. I'll just wait and see if it breaks through that high there. Okay, so it was good to take profit on the weekend. Fantastic. That was a good one. Right. Euro, United States dollar. Heading on to the downside. There we go. Nice big red candle. That looks like it's going down as well. And the Euro Great British Pound looks like it's going to hit target. It's going to hit the target all the way down here. And yeah, it's a pity we didn't hold on to that one. Okay. Simon, GBP go fast up. That's why gold go down. Then you go. Boom, 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 boom. Not really. Gold is pegged against the dollar, guys. You know? So, I don't know about that one, Simon. BTC is heading... yeah, BTC is definitely heading back down to that 110. Looks like it, eh? Interesting, though. Very interesting. I shall get used to the crypto there, Bruman. It's actually... it's the same as anything else. If you're trading it technically, you can read the chart like a book and you can see what people are doing and what's happening here. And obviously, I mean, one of the small things to do, just look at what's BTC doing, and you probably get a good idea of what Ethereum might do with it close by. It's not going to be far off, is it? So, yeah. So I doubt it's going to break through to the upside, but if it does, it'll be a good long trade. I'm actually preferring the ETH trade to the BTH trade at the moment, quite honestly. Quite a lot of fun. It's got more action in it at the moment, but I don't think that's going to be forever, though, because if you look at it, it didn't do much in the past, did it? It was kind of just like hanging around here, and then suddenly you got this nice boost from all the talk about it and what have you, and now suddenly it's actionable, it's doing something. Let's see, we can't trade Bruman's Fartcoin. That would be great. Yeah. Maybe I shouldn't talk about investment as much as I talk about trading, because I can see that we've got a lot less viewers. People don't like the fact that they're going to have to wait for money. Instant gratification is such a big thing in today's world. People want to trade, they want to make money now. It's like I said to you guys last week with the trading. Everyone wants to get into trading, and then they start trading on the day trading or the daily charts or the weekly charts or the 4-hour charts. And eventually they end up trading on 1-minute charts because they just get so bored trading on these other charts, and then they lose money. And that's tricky. And then they end up getting older like me, and you end up back on the 4-hour charts. So yeah, it's got to the point now where the USA has had to put regulations in place to stop people losing their money. There's regulations about how you can trade and how you can't trade. I don't know the ins and outs of it because I don't live there, and I don't know the exact points. I can't even remember what the abbreviation is as to what it's called. But there's a thing that America's put in place to stop you guys trading contracts for difference and going mad and leveraging yourself to the moon. And in fact, if you don't have a certain amount of trades in or a certain amount of money in, you can't even trade certain amounts. So I don't know. You guys could tell me more about that than I can. But it's got to that point now where governments are stepping in and stopping people from over trading or trading too much. So now you get a whole bunch of unregulated traders. So I guess you guys trade on a VPN or something like that, and you trade with all these unregulated traders overseas and what have you, which is kind of high risk for you because you're not protected at all. And now that your government trying to protect you from these guys, and it becomes more difficult for you to trade. It's a real nightmare if I think about it. It'll probably filter through to us eventually as well. You see, there's Bruman saying you have to move to Portugal because Canada will not let you trade more than 30,000 per year. I see that that's something similar to the US, isn't it? And like I say, I don't know the exact rules. I'm adverse to it. I don't know. I haven't looked at it. I should actually look at it, but it doesn't really matter to me because I don't trade there and I don't live there. But yeah, it's insane. You only they're limiting your trading. I mean, what are they trying to do? I suppose, I understand the protection thing because they don't want to pay for you to survive on the street or whatever the case because you blew all your money on trading. But I get that. I get that they don't want to be responsible at the end of the day, so they're trying to protect you and your capital. But it's your life, your money, and it's a bit like the old days when they said you're not allowed to smoke. I said, well, what are they going to tell you next? You're not allowed to eat hamburgers? Yeah, that's pretty much where they're going. So, yeah, control has become a big thing. So, yeah, I can understand why you've had to move to Portugal there, Bruman. And myself, I live in South Africa. I live in Cape Town. And the regulations here are relaxed at the moment as far as this goes. I am concerned that it's going to start coming. I mean, I already see like little flickers of the Bitcoin and crypto and that sort of thing where they're starting to measure that and what have you. But it's still not that bad here. We're still okay. I can still trade whatever I like, whenever I like, however I like. The brokers are regulated, but they're regulated in such a way as to just make sure that they're genuine brokers. That's all. They're not saying, oh, you're not allowed to trade more than this per year. I can trade as much money as I want to. So on that front, we're good living here, but I see it a lot in the US and I see now Canada as well. They're telling you how much you can trade. How's it in the UK at the moment? Can you trade what you want there still? I don't know. Pattern day trader, you need at least 25,000. Yeah, 30,000 is crazy. It's insane. I mean, how can you expect someone to trade on 30,000? Sure. Even 25,000 is not enough. I mean, these little $25,000 accounts are for fun and for showing you guys how to trade and stuff like that. My main accounts are always 100,000. You can't trade with less than that. How are you going to make money? It's crazy. Crypto only 30,000. Yeah. Oh, you can buy spot as much as you want. All right. Yeah. Okay. All right. That's fine but that's an investment. I mean, if I want to invest $1 million into Amazon, I can. Yeah. Okay. That I get. You know, that's fair. But yeah, they would never stop that, because otherwise they'd have to stop Warren Buffett, wouldn't they? I mean, imagine telling him you can only invest $30,000. No, I get that. So yeah, spot's fine. But it's leveraged accounts. I get that. Futures and leveraged accounts and things like that. But I think they're trying to do away with the leveraged account system somehow, or I don't know, which would be really bad for all of us. You know, I love the leverage trading accounts and that sort of thing. But yeah, it's it looks like something they're going for. They're pushing against. So do you keep all your dosh in an account, Bruman? Like, do you like have different smaller accounts? Because I wouldn't put that much into one broker account. Mind you, if it's crypto, I suppose, yeah, it's different. It's on the crypto exchange, eh? That's fine. I'm very cautious with funds, leaving them with brokers. I'd rather take it out and put it in the bank than or in shares or whatever than leave it with brokers. But yeah, I expect, Bruman, you'd be on a crypto exchange, so it'll be a different game. Yeah, there you go. You just answered the question. Split it among 10 accounts. There you go. That's it. I'm the same. If an account's too big, I don't rather split into another account. And I'd rather trade the same on both accounts, but I'd rather have it in different accounts. Because then I know if I rock up on Monday morning and one of the brokers has said, "As your father, I'm out of here," then at least I know they haven't taken the whole shebang. Yeah, that's my thing. Even with banks, you'd be surprised with banks. Deal with one bank, not me. No, 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 no. Did you see a number of years back? I can't remember the date, guys. When was it? When they were lining up in Greece, they were lining up in the UK as well to go to the bank to get their money. And the bank was saying, sorry. And you needed money to buy food, I don't know, to buy anything, you know? And they weren't giving the money. I can't remember the name of the bank. But no. Split it up, guys. Split it up. The more you got, the more you can split it. Look, if you don't have any money, then you just need one bank account, I suppose. But when you have larger amounts, split it up. You don't want to be standing in a queue, trying to get your money, and the bank saying, "We don't feel like giving it to you today." You know, sorry, or we've run out of money. We've run out of cash in the safe. We can't give you any money. You know, because at that time people were lining up to get cash because they were worried they wouldn't be able to pay for stuff, and it was all kinds of insane. There was a run on the banks, and yeah. Yes, of course you could live off the interest alone on that money. Yeah, totally. You see, that's the thing. Once a trader, always a trader, which is why exactly what you said now, Shane. If you think about my situation, right? I said to you, most of my income comes from the investments, because the investments, it's like living off the interest alone. I get the dividends, I get the money in, and all the rest of it. But I'm a trader by heart. So some of the money has to go into trading. I have to trade. It's just one of those things. And exactly what Bruman says, I'm a trader. But it's easier for Bruman and myself, because it's easier for us than for a lot of other people, because trading is not our last stand, you see, because we've got that backing, you've got that money behind you. So it's coming in, so you don't have to worry too much. Whereas if you don't have that coming in, that becomes insanely painful. That becomes a worry. And I was in that position in the beginning. I mean, where I only had trading and nothing else. And then you that's the last buck. You're trying to make a buck for today. You're trying to make a buck for the end of the week. You're trying to make a buck for the end of the month. That becomes pretty tough. I know how that feels. That is difficult. And that's what draws you to start trading on 5-minute charts, because you're in a hurry. You need to make the money quickly. But yeah, trader by heart is generally what good traders are. Traders by heart. You're a trader, and that's it. And for every win and every loss, you take the fun and you take the pain. And the smallest wins are exciting. It's nice, you make a couple of thousand here and there, and it's exciting. You're like, wow, that was great. That was fun. And that's what trading is about. But yeah, like you say, Shane, you could live off the interest alone, but I mean, why just put it in the bank? So I put it in share investments, and that is just like living off the interest alone, which is what I was trying to explain to you guys earlier. If someone does get a large sum of money, a large pension, a large amount of money, and you need to do something with it, then take it. And if you have a nice, decent share portfolio, that's like leaving your money in the bank and living off the interest. Then take a small portion and do the trading with it. And if you learn to trade really well, the investment becomes easy, or the investing becomes easier. Okay, so it's a good idea to trade, because you learn more about the markets, number one. You learn how they go up and down. You stay in touch with what's happening in the markets. You stay in touch with what's fundamentally going on. You stay in touch with the indexes, the Forex, and the crypto and everything going on in the markets. So you fundamentally know what's going on. It keeps you in touch, because if you only invest, you kind of detach yourself. And when you detach yourself, you don't really know what's going on. So if something does go pear-shaped, you won't know what's happening with your investment account. Whereas if you are a trader and you enjoy trading and you're trading on a daily basis, then you do stay in contact and you do stay in touch. And it keeps you in touch with the daily markets and what's happening and where it's going. It also teaches you a lot of different things that you can use in your investments, and it makes a difference to your investment portfolio. Shane, what you say there is everyone is different is actually pretty true. Everyone is different. I don't see many good traders or traders saying I'll be in for a couple of hours and I'll be out. Most traders that enjoy trading stay a lot longer than just an hour or two. So yeah, no, it's much of a muchness. Everyone's different. Everyone's got their own way of trading, and everyone's got their way of making money. And if you're a scalper, that's your psychology. And if it works for you, that's just something I always say. If it works for you, stick with it. Don't change it. If it works for you. If it's not working for you and it keeps on failing, then you might want to look at some other way of trading. I don't say system. Be careful of this. Don't change your system every 5 minutes. But you might want to, look at the time frame you're trading on, or the way you're trading, or how you're trading, or the speed, or what type of instruments, or whatever the case. That might be affecting you if you're having a bad run. But if you're doing well and you're good at it, then you stay with it. Like I always say, I'm not a big fan of scalping, because I've done scalping a couple of times. It doesn't work for me, because I win 8 trades in a row, and in the 9th trade I lose all those 8 trades that I won, and it's painful. It just destroys me psychologically. So I don't do that. But for someone else, like Ruman, he's a good scalper, and he loves to scalp, so it works for him. You stay with it. You stay with it because it works for you. It's when it doesn't work for you that you've got to say, ooh, maybe I should look at a different way of trading. I've done that before by mistake, but, because I got bored, and the higher time frames, I was like, oh, I'm never making any money here. This is not working, blah, blah, blah. So what do? Go to the lower time frames, start trading on 1-minute charts, and then I find out that that's not working so well anymore. So you end up back where you started. You know, you got to be super aware of where you're going in the markets and what's working for you and what's not working for you. Let's see what's up and what's down here, because this thing doesn't correct itself. The Brent crude oil is going in the right direction. My South African rand's not going in the right direction, but that should be failing. And yeah. Shane only trades once twice a day with very strict rules. But Shane, if you trade on shorter time frames, don't you need to trade more often? You know, if you trade on higher time frames, you clearly need to trade less often because you're taking bigger targets or whatever the case. But if you're trading on lower time frames, I would think you'd need to trade a few more trades a day or a bit more often to make the dosh. I don't know. Or is it just a question of you made enough and that's it? I don't know. That's everyone to their own. Everybody's got their own thoughts on that and their own ideas on that particular way of trading. Trade 5-minute charts, trade for 2 hours, take $200. You know, the trouble with that scenario is then we're making the assumption that we're going to make that money, and then we might not. So that's also questionable. Yeah. That's another, you know, FX traders says swing trading is easier. I totally agree with you. I'm not a big one for terminology in the stock market, but I just have to clarify that the swing trading and the position trading, I call position trading. It is actually what you know as swing trading, because in our days, swing trading was you trade it short or long, and when it goes short, you trade it short, and when it goes long, you trade it long, and you stay in the same trade forever. That was what we knew as swing trading back in the day. But we used to call it position trading. So if you hear me call it position trading, it's basically what you now refer to as swing trading. But it is easier, it's slower, and you take less trades, and it's obviously more boring. So that's the point. Day trading is much faster, much quicker. But if you want to be a day trader, it's very important to still have a strategy and still have a business plan. Business plan is important. Only 200 risk makes a living. No, it doesn't. 200 risk will not make you a living. This account is a $25,000 funded account, which is here for you guys to learn, you know, and I got the other one as well, and it's just for that. My main cash accounts are always $100,000 each, and you need a good sum of money to make a profit in the market. $25,000 account's not going to make you a living. Unless you can live on that kind of money, I don't know, maybe you can. But no, that's not going to make you a living. These are just accounts that you can play around with and build and that sort of stuff. The main accounts is where the money is. For example, the Ethereum I traded on Friday over the weekend made me about $2,000 something. It was great, nearly 3,000, and that's money in the bank. That's great, but it's that's on a cash account. That cash goes into the account. That's different. Those are big accounts as well. So no, I'm not, you know, trying to promote to you that you can take a $25,000 risk $250 and make money. No. That's if you want to build an account, if you want to grow it, if you want to make some extra money, whatever the case. I doubt very much that that's going to make you a living. You probably have to risk 10% per trade to try and make a living off such a small amount of money. And then the likelihood of you losing it all very quickly is very good. So if look, I would say if you want to make a living in the market, if you want to survive, and you're going to need, this is my point of view, and you guys can correct me if I'm wrong, but I think you need $100,000 at least just to make a living in the market. I don't know, you know, you can take a small account like this and you can grow it if you've got income coming from somewhere else. or you've got another form of income, or whatever the case. Even if you have investments like we do, you've got investments on the side or an investment account that's paying you dividends and you can live off that. Then this you don't have to touch and you can just grow the account. Then you can use any amount of money. You can start $1,000 trading account and you can grow it. Making a living out of it is a different ballgame. So no, you're not going to make a living out of a small account. Not easily. And generally what you got to do to make a living out of a small account is risk high. So in other words, you're not risk adverse. Now you've got to be a really high stakes trader. Now you go in with the high stakes. Remember, trading's 50-50. What do you do when you lose it all? Because the only reason you're going in on high stakes with low amounts is because you don't have bigger amounts, which means if you don't have the bigger amounts, you lose the smaller amount that you're trying to risk high risk on so that you can make more money. Then what do? Because then you're on zero. So where's the next buck coming from? That's why I say it's not easy to make a living off a small amount of money, because you've got to remember that the risk factor is you might end up with nothing. Okay. If you have millions in the bank and you want to play with $25,000 accounts on high risk or whatever the case, that's different, because if you lose the account, you just add another $25,000, I presume. But then you might as well be trading with the few million that you've got. So, like I say, it's an interesting scenario. Sorry, guys, bit of a had a call coming in there that was needed taking. Okay, cool. Sorry about that. See, all the viewers dropped off because I took my face out the way. Yes, I thought I'd start a new game with you guys called Hide and Seek. I bet you couldn't find me. None of you could find me there, could you? You didn't know where I was, because I disappeared from the top right-hand corner and I went to not the bottom left-hand corner. I just disappeared. Ha! It's magic. Magic's magic, man. Boo. Yeah, no. I tell you what, it's insane. So many people that try and call me for stuff. It's unbelievable. Okay. Where was I, by the way? I'm pretty sure I was talking about something important. Oh, finally, I got a good connection. I tell you what, when I first started doing these live shows, I used to get an excellent connection every time. And then it dropped off to good connection, and now I keep getting these yellow like warnings. Yeah, I tell you what. But the internet's normally pretty good. I tell you, when we started out trading, these internet accounts that we've got these days are all unlimited and they're all fiber and all super speeds and all the rest of it. Back in the day, I tell you what, we used to have to, when we first got computers, we would switch on and like look at the trades and then switch off, because internet was really, really expensive back then. Okay, so how do we avoid going broke trading? But Shane, I said right in the beginning, the only way to avoid going broke trading is not to trade. No, look, as I said in the beginning, to avoid going broke trading, you have to learn to manage your risk. And that's the important part. I did go through it in the start of the video. You need to avoid going broke by managing the risk and having a strategy and having a business plan. That's the only way, guys. The only way. And one of the big things, I'm bringing out a video on retirement as well for people that are risking their pensions and that sort of things. Avoid going broke in general, you know what I mean? And that means just invest and forget about trading. But for those of you who love trading, the important thing is to understand that the charts don't have a predictive capability. The charts are not going to make you money. Win rates are not going to make you money. The only thing that's going to make you money is your risk management and your strategy. That's what's going to bring you the money. Nothing else is going to bring you the money. How do you think that a chart is going to make you money? A chart will give you a high probability trade. There's an all good chance that it might go the right way, it might go the wrong way. If it goes the wrong way, you have to manage that. And that's how you avoid losing in the market. That's how you avoid losing everything, is by managing that risk correctly. And which is why somebody asked me here earlier, can you make a living out of risking $250 or $200? No, you can't. This is all I say is whatever the size of your account is, that's the size of you, and you can risk 1% of that, and then you can stay in the game. That's how you avoid losing everything. That's how you avoid going broke. That's the size of you. That's the size of your account. And if you risk 1% on every trade, you can take 10 trades and you lose 10%. You've still got the other 90%. You can still hold on. It's up to you. If you want to risk 2%, you can do that. If it's a bit higher risk or whatever the case. But, that's how you avoid going broke. Because the one thing to realize in the market is if someone's got the $5 million, for example, and you're trading on a $25,000 account, you don't need to risk 1%. You can risk whatever you want. But most people with that kind of money are not gonna bother with that or trade with that. This is just for show, right? I have my accounts. I normally make them $100,000 accounts so that they don't get ripped off, and I risk 1% on that, which is $1,000 on each trade, and try and make a couple of $1,000 per trade. That's how I work on each account. So I don't like to put all the money in the accounts, and I like to put all the money in the investment accounts. The investment accounts are where I prefer to leave the dosh, and they carry on growing for me. I don't like to take all that money and put it into trading. Trading for me is like just a bit of fun. So I make smaller accounts in trading, and I make bigger accounts in investing, and that's where I put all the money. I'll put all the money in the investments. So yeah, it's much of a muchness. But if you're trading on a $25,000 account and you're risking $250, the chances of you making a living out of that are pretty remote. I mean, it's not going to be easy for you, that's for sure. And if that's all the money that you have, then it's going to be difficult. If you want to risk more of it, then you could go broke. There's a good chance that you're going to go broke. That's the difficulty of it. A lot of people will promote that you can come in every day and you can trade for a couple of hours and you can make a couple of $100 and then you can go home, and every day you make $200. So if you work that out, a couple of $100 a day, it's, you're getting some income. Trouble with that is when you're using that money, you're not growing your account, number one. And number two, you're not going to win $200 every day. Nobody does that. Somewhere down the line, there's going to be a disaster. Somewhere down the line, there's going to be a loss, and then it's going to negate all those gains. So there's a reality to look at. And the reality is you don't win every trade. Nobody wins every trade. And charts can't predict the market. And there's another point that I didn't make that Bruman makes. Not every day is there's a good trade. There's not every day that you get a good trade. Well, particularly if you trade like I do, on position trading. On the 5-minute charts, you'll probably get a trade every day. You'll probably get a decent trade. But on the 4 hours and the day charts and things like that, there's a good chance you might not get a trade. In a couple of days, you might not get a trade. I do try and find a trade every day, but there are those days where you search and search and search and you think, oh, there's nothing out there, there's nothing to trade. But that's trading. You've got to get into that under that as well. I'm pretty sure on on the day trading side, on the 5-minute trading side, on that sort of thing, you will find a way to make some or find some trades on the faster time frames. I've noticed when I traded 5-minute charts, some guys are trading 1-minute charts and second charts and things like that. But I noticed when I was trading 5-minute charts way back when that I could always find a trade. In fact, a couple of trades every day. There was always trades. But it's when you start trading slowly and you start trading on like day charts or 4-hour charts, then the trades become that much more scarce. You're going to get a lot less trades. Look, what you can do is, for example, like I did here with Brent crude oil, and I only did it on the realistic. There's a $270 loss risk and a $724 win rate. Okay, you could, on a cash account, you can take this and you can make it a really big trade. So in other words, if I've got a $100,000 account and I want to risk on it, I could say, you know what, I'm going to risk $3,000 and make $7,000, and then you can leave that trade to run and see how it goes, So you can have a different risk factor on a cash account. On these funded accounts, you can't do that. But yeah, just for that information, that's entirely up to you. How you manage your account is up to you, but just manage the risk and keep the risk the same on every single trade. Don't change the risk amounts. In other words, if you're always risking $1,000 on that account and then suddenly you risk $3,000, you have to understand that that's 3 trades. You gotta work that into your system as 3 trades. You can't work it in as, oh, I'll just change my risk amount here. No, you can't do that. Or you must decide, I'm risking $3,000 on every single trade. And that's how I'm going to do my trading. And I'm going to take wider berths and I'm only going to take 1 trade a week or something like that. It's entirely up to you. Okay, yes, on the 5-minute, there's usually a trade every day. I would need to find a lot of liquidity. It depends. You see, for example, I know that from getting to know you guys, that Bruman trades crypto. So I would believe, and you can correct me if I'm wrong, Bruman, because I'm not a crypto expert, but I would believe that most of the crypto probably moves along the same direction based on the fundamentals of the news behind it, or whatever the case. So when something happens in the crypto world, I would presume that most of the cryptos will move along a similar trajectory. Maybe not exactly the same pace, but along a similar trajectory. So if it's bullish, it's bullish. If it's bearish, it's bearish. So that reduces your trade availability, let's say, but it also gives you an advantage in the sense that you know which way the market's going. But yeah, I think that maybe reduces the amount of trades that you get available to you. Whereas Shane, for example, trades mostly with Forex and indexes. And there's a lot of difference there. There's a lot of availability there. There's always a trade on a 5-minute there. So that's probably where the difference might lie. But yeah, like I say, on crypto, I'm guessing that that's probably where one of the problems would lie. On investing, FX trader, on trading, I do not ride out stock market corrections. On leverage trading, most certainly not. I stop loss. But on investing, I ride out stock market corrections. Yes, I ride them out but you see, it's easier for me to say that and do that because most of my purchases were made before any corrections, a long time ago, let's say. So now all I do is I add to what I own, right? So even by adding to it, it doesn't make a hell of a difference to the portfolio. And if you add 50 grand to a $1 million stock, I mean, it's not going to make a hell of a difference to it, is it? So when there's a correction, it doesn't really go into the red. Even a serious correction, it never really goes that bad. So it's 1-to-1, remember, it's spot, so it's fine. So you just leave it and don't touch it. What I normally do in a correction like that is kind of get excited because I see an opportunity to load up. Because the fun thing is, in a correction like that, is when those prices come down on those shares, you know that when you load up into those shares, you're going to make an absolute fortune. And the only reason I know that is because I've been through a couple of crashes and I know what happens. It always comes out on the other side and it always makes you a whole load of money. You know, there are those companies that I do sometimes worry about once or twice in corrections where I've looked at my investments and thought, maybe I shouldn't hold on to that because it might just, go to zero. Those I would sell, but it's very, very seldom that I'll do that. And also, what I will do, obviously, is on the open market and even on shares, on the leverage trading, hit the shorts. Boom, boom, nail them in if you can. I'll tell you what. That just sort of imbalances your investment account. Interestingly enough, you guys are talking about you're talking about the moving averages, right? And the fibs, okay? The exponential moving average there by Bruman. And the trouble with moving average systems is they do work. Every system in the market works, but these moving average crossover systems do work. They work quite well, especially, is it the 9 and the 20 or the 8 and the 20? I've used them before. And I've never been quite sure which one's better, the 9 or the 8. But okay, much of a muchness. The trouble with those systems is they're lagging indicators. So the one place that I will use moving averages a lot is in my investments is if it's a 50 and the 200. I look for the golden cross and the death cross. That's it, and it just sort of tells me that it's worth buying or it's not worth buying or whatever the case. If I get a golden cross on a share, then I'll be like, yeah, I can invest in that. So yeah, no, that's one place that I'll use a moving average, but moving averages are lagging indicators. They're very much lagging indicators. It's so far behind that if you work on a moving average system that crosses over and you buy and it crosses back and you sell, you'll make a profit, but you'll make a much smaller profit than you would, say, on price action. Pretty much the same as MACD, similar scenario. But there's a lot of pro traders out there, guys in institutions that literally only trade on the RSI, relative strength index. It's overbought, it's oversold. It's oversold, they buy. When it's overbought, they sell it. And that's literally all they do. That is such a lagging indicator, but old-fashioned, and it's big money, so it works for them because, they can't, with that kind of money, they can't look for quick small buys like we can. They have to really search out the liquidity. And that liquidity is not always available. So it's easier for that kind of money to just buy on an overbought and sell on an oversold buy and sell on the overbought. Yeah. So how's it, David? Good to see you. Use SMA similar to Williams. Simple moving average. Yeah. I've always preferred actually the simple moving average to be straight. It's just easier. But yeah, I don't even look at them anymore because they are very lagging. But if I was going to look at something, even on my investments, when I use the 200 and the 50, I use the SMA. It's straightforward. There's no worries. perfect. It's close enough, because those are wider aspects. It's like I said, no, like when the pro traders use RSI, I mean, it's close enough, you know what I mean? They're using such big amounts and they're looking for liquidity in that general area. They're not looking for a specific exact price. Um, you're moving averages, crossovers. Mm, it's interesting. And you add more to it no matter what the day is doing. When you have a winning trade and you add more to it, you do it no matter what the day is doing. No, Val, always keep in mind what the day is doing. Always keep in mind what the day is doing. Keep your ear to the ground. Keep your ear to the ground. I mean, for example, not just under normality. For example, oh, the day looks bullish, so I'll add to the trade, or the day looks bearish, maybe I shouldn't add to my trade. No, not only that. For example, a time like now, people are waiting for some serious news information on the economy or whatever the case, the next news item to come out. So it might not be a good idea to add to your trade before that news event happens, because you don't know what's going to happen. That said, if you don't add to the trade before that news event happens, then it might shoot past your target and you might not be able to add to the trade anyway. But bear in mind that if that happens, you're in profit anyway, so it's not a big deal. But there are times, just keep your ear to the ground and say, should I or shouldn't I? If things are all normal, if everything's normal, everything's okay, there's no big news event coming out, there's no serious one way or the other in the market, whatever the case, you can just look at the general consensus on the feeling. Like, let's say you're trading on the 4-hour, you want to add to your trade, have a look at the day and the weekly. Is it bullish? Is it not? And then just go with adding to the trade if you need to. That's kind of fine. Also with your investments, when you want to dollar cost average or add or whatever the case, same scenario. Look at what's happening in the world and decide whether it's a good idea to add now, or should I wait a little bit and add a bit later on. Just look at what's going on. Don't ignore what's going on in the world. So when I say look at fundamentals and I say look at things that are going on in the world, what I say is don't hang your hat on the news like I did for so many years, waiting for Thursdays and Fridays job figures and Wednesday's economy and inflation and CPI and all this rubbish. Forget about all that. That's just going to push you around, stress you out, make you bald, make you gray, and it's not going to help you in any way, shape, or form. It's just going to drive you insane. What I talk about when I say keep an eye on the fundamentals is keep an eye on the bigger things that are happening. Keep an eye on the big picture. What's going on in the big picture? Because that's what's important to whether you're going to add to your investments or whether you're going to add or subtract from a trade or whatever the case. The big things that are happening, things that are happening around the whole world and that will affect the news. For example, even in a company, things that are happening within a company. I don't know if you saw in the news this morning that NVIDIA is actually going to be getting pushed in China. So, if you look at if you go around that news headline and you take the bigger picture, what does that mean? What does that mean for NVIDIA? Sounds good. Sounds like it's going to be pushed in China, which means how big is China? It's massive. So, you start thinking, wait a minute, this could go really well for this company. Maybe I should add more to this stock. The wider picture. Look at the big picture, not the little picture, not the moment now. And I don't know what happened there. Have a reload. Goodness me. Insane. Okay, well, it's back. There you go. No big deal. Wonder why that went off. But yeah, look at the bigger picture. Look at the scenarios that are going on. And, the small news events are kind of worthless to you. They're not going to do much. They're just going to move things up and down and mess you around. But if you're a news trader and you know exactly how to follow the news, then you can play with it. But news is complicated. It's not just straightforward. It's not just, oh, the news and then you trade. There's a bigger picture around each news event, a much bigger picture that you need to look at. It's far more important than that, just this happened and then we're going to do that. So the guys that are talking to me a lot today is Bruman and Shane. It's good to see you guys. I wonder what happened to Kevin. Kevin's not here. I try not to be boring, guys, and repeat myself, but I do repeat myself often in the videos, particularly about the strategy, particularly about the 50-50, and particularly about the charts not having predictive capability. And I've had a few people sort of say a few things about that, but unfortunately, 98% of people are actually interested in that. That's what they want to, they need to hear it and they need to know about it. So that's what we're going to keep on harping on about it, keep on chiseling away. But further than that, I am looking at a few different perspectives for information and videos for you guys to see if I can make it a little bit more fun and a little bit more interesting as well. But sometimes when I do deviate, I see a lot of people sort of walk away. They want to hear what I'm saying. So I've got to be very careful where I go with that. But I'm trying to make it more interesting for you guys as well. So I'm looking at sort of more improved subject lines and that sort of thing in the channel, and I'll try and make it a little bit better as well. Talk about a few other subjects like we did today, like retirement and avoiding going broke and that sort of stuff. We'll try and incorporate that in if that's something you guys want. But if you see I'm going off on the wrong road, you guys had better tell me. Okay, and where's Blue? Yeah, Blue Mango is not here today. He's also missing. Hi Rob, I'm also short euro and doing well. Yeah, I let it. Yeah, there you go. It's run really nicely, eh? So we called that. Geez, we called that last week and it did really well. I think it's going to bounce off the support though. We'll see. We'll see how that goes. Still thinking gold's might going to go short. I'm interested in the US 500. It's holding on here, but I'm also looking at, let's just look at the NASDAQ, eh? You've got these tech shares in here. And the NASDAQ's moved up into this kind of little rangy thing here. It's moved straight up, it's broken down, and it's broken back up again, and it's hit that double top. And that double top is saying, I might want to go down. It's a little bit tricky, but you do have this holding. So this trend support is holding just like on the S&P. But what I'm seeing here on the NASDAQ, which is the Tech 100, is this double top. Now, the Tech 100 is insanely strong in the S&P 500. So if the Tech 100 comes crashing down, guess what goes with it? So S&P 500, of course. So the S&P 500 is obviously made up of, the different products, including the Dow and so on, US 30, etc. So there is an effect, like for example, US 30 is gonna affect the S&P, but the biggest effect on the S&P is this NASDAQ, this Tech 100. The double top does concern me, and if it breaks through that level on that double top, you could see a big down, and that will pull the S&P 500 down with it. Because if you look at the S&P 500 by itself, you don't see the double top. You don't see it's hit that top area. There is a bit of a topish area here, but you don't see that. But when you look at the Tech 100, you actually see it quite clearly. It makes a big difference. So keep your eyes on that, guys. Keep your eyes on that. While it is still bullish, very cautious on these on this S&P 500 and Tech 100 at the moment. So if you are long in those areas, just keep your eye on it. Just keep one eye open. Shane, what does it say on the higher time frame? Sir Lancelot's here. Hey guys, how's it? Yes, how's it, Sir Lancelot? Good to see you. And by the way, I don't play golf anymore. And I'm terrible at it. Absolutely useless. And Sir Lancelot asked me the other day to play golf. Yeah. I hate it when you get to the 9th hole and then they say we've got to do another 9 and or go back around again. I'm like, no, man, I want to go to the 19th. Yeah, no, I get bored very quickly. No, I shouldn't, but yeah. Okay, so Lancelot, short on the DAX. Sure, there's a goodie. Yeah, DAX looks short. So that kind of plays in to what I was talking about just a few seconds ago with the NASDAQ 100 looking a bit iffy. That will follow through to the S&P 500. Now you've got the DAX looking a little bit short as well. It looks like this market's going to go short. Looks like this market's going to go short. Just get that feeling. Just getting that feeling at the moment that it's going to go down. Could be wrong. Could be wrong, but why would we be wrong? It looks pretty decent for a short at the moment. Might be worth looking at, actually. Who doesn't like the 19th, Shane? I'll tell you a little golf story. I went on a little trip, and this is for Sir Lancelot because he did ask, and for you guys that are interested. But I tell you, I went on this little trip, and at this lodge, and I got a golf course, and it does the 9 holes, and then you got to do the 9 holes again. Okay, so me and my mates we decide now we're going to do this thing. So we get the golf cart and biltong. For those of you that don't know what biltong is in America, it's beef jerky, whatever the case. So in South Africa, we've got a thing called biltong. Loads of biltong, bottle of whiskey, and there we go. I tell you what, we had so much fun on that day. Got to the 9th hole, and one of the guys is insanely serious about golf. Me, I'm useless. I don't give a damn about it. It's the 9th, and he says, "Oh, we got to do the round again." So I was like, and I've gone through this biltong and this bottle of whiskey here, and I'm like, no. We're not doing another 9 holes. We're going straight to the pub now. We're going to the 19th right now. No, we have to do the rest of the course. And he was so insistent that we had to do the rest of the course. We dragged him into the pub and we said, forget it. It's not happening. I don't care if you paid for the full 18 holes. We're going to the pub. No, I'll never forgot that. I just got so bored. I can't do it. It's not for me. It's for someone else. I can tell you that now. So no, I don't do it anymore, Sir Lancelot. I actually stopped. It's not something I do anymore. Yeah. That's what you thought. Cool. Yeah, patience. Patience is not the thing. Patience is not the thing. I think maybe we should short the DAX. It looks like it wants to go short. I wonder if we should short the S&P 500 actually. Yeah, it is looking quite interesting, eh? But the other thing you've got to look at as well is it has broken some structure here. And look at that. That's broken straight through that structure. It looks like, but there is a level here. You're quite right. There's a big level here. There's a level here, and there's another level here. So maybe it needs to break through this level as well, which just actually shows you that you've got this level. So now you've got, on the DAX, you've got this level. On the NASDAQ 100, you've got this trend support which needs to break through. It's come off the resistance. On the S&P 500, you've got the trend support that it wants to break through. This is looking rather ominous. It's too early to trade, but it is looking ominous. And okay, it's bouncing off there. There is some buyers coming back in, but you know, let's see what happens. Let's see what happens. Should be interesting. Should be interesting. I'm just getting a nasty little feeling here, but it could go either way. I mean, they could all bounce. They could all bounce and go back up. So let's see what happens. Let's see what they do. Should be interesting this afternoon. If it breaks the level, we're all good for a short. Yeah, actually on all of them. I mean, I think if it breaks the level, it's going to break on all of them. And that'll be interesting. That'll make for an interesting trade or an interesting trading day. Let's see what happens, guys. Keep an eye on it. Let's not go shopping, eh? Ruben, do you know, the lunch is the cheap part. The beer is the bit that's hectic. So yeah, you provide the beer. Yeah, no, those beers can go far, young. Let me tell you, they can go for long. Oh gosh, the DAX has touched the 200 EMA. Okay, and on the fib, it's bouncing. Yeah, well, let's see. We'll see what it does. We'll see how it goes. You know, and it'll be interesting to see what happens. I'm glad you can afford it, Bruman. That's what I like. I think most of the guys on this channel, like we said earlier, are over 40. I think most of them can afford it, so we'll be okay. Anyone who's trading surely can afford a beer because you've got the money to trade, you've got the money to buy a beer, that's for sure. All right. Guys, I'm going to go and put on now and be on my way. Then we'll be back for another live show on Thursday. I hope you guys enjoyed it today. I hope I wasn't too boring. I hope it was exciting in some way or another. I do try to keep it interesting, at least not go too boring with you guys. But guys, it's been fun. It's been great again. I've had a lot of fun again. It's been great. As I always say, keep your feet on the ground, reach for the sky. If you need some money, chat to Bruman, not me. And make lots of money. Have a good week. I'll see you guys on Thursday. Hopefully you guys will all be back and we can carry on chatting. So for now, have a good